All right, hey, it's February 20th, 2014, and it's Thursday. We're doing the trading recap today for the stock market. So I'd like to discuss a couple things that's been happening in the news and so forth, but before we get to that, I just want to share with you a free video that I put up on the lesson from my latest course. It's Day Trading Domination. So if you go to the YouTube page, you can see it over here, and you can check out that lesson. It's a 45-minute video, so about 20 minutes of that is the lesson video, and you can also see it at the Rise to Learn website under the stock trading area, and then go to Day Trading Domination right here, and you'll be able to watch that video. Now, today I'd like to cover a few different stocks on the market. I want to start with some of the stocks that did get requested. So I had one stock here, JEC, that somebody asked about for me to do the review. So I want to start with this one. And I took a look at it on the longer term scale. If you take a look at the monthly, you can see that this stock is doing somewhat of a retracement period. So if we take it on a Fibonacci level, you can see that it's hitting the 50% level right there. And on the monthly, it bounced and didn't go past that yet. Can it go higher? Yes, it can. But right now, this is where it's heading, and that's the level we're at. If we take it to the weekly, you can see even closer that it hit that level right exactly at the top. And the trend line, you know, it's still continuing on this trend line. So I wouldn't short it. I wouldn't go long it. I want to see how it would act beyond this line or level. That for me right now is kind of the key. You know, the volume isn't anything amazing. It's moving well. So if you got in it, let's just say over here on the earlier side, let's just say you got it in somewhere around January 18th, February 1st, so on and so forth. And if you've been riding this, then you know you want to take some off, because it comes down to money management, and that's what you really ultimately want to do, is you want to manage your money and position correctly. So as it rides up, you know, you had a 17-point run or so, then you want to take part of your profits off, and that's what you want to do. Now, another one that somebody asked about was power. And the same thing with this one. I think the person that looked at this one was looking to short the stock. For me, as I mentioned, was I wouldn't short this stock, because right here, looking at this trend line, it's been holding this trend line fairly nicely. And, you know, you can try and short stocks, you know, at the highs here or there, but you never know how high they'll go. And typically they always fake us out. For me, I would normally go into shorts, if you're looking to short, when things break trend lines like this. This one for me, you can see that it was holding the support level fairly well. We're looking at the weekly. You can see that it's been holding it well, so the only time I would short is if it broke this at this point, looking at it from here. So I wouldn't short this stock, and that's not the way I would do it. Instead, if you look at EIG, a very similar example that I ran across today, you can see the trend line here. I would have shorted it right around here, right around that $29.80 mark, and it would continue lower. But if it would have held this trend line, then it would have continued on the trend line. So that's the type of stocks that I would short, and those are the positions that I look for. When trading and doing all this stuff, you got to remember that you're creating a system that works for you. You're creating something that only works for you and specifically for you, because you're managing a different type of risk asset. You're managing your money than other people are managing their money. So you can't trade the same way that the huge institutions trade, because they need liquidity. They're trading stocks like Google. But for you, if you want to trade the less expensive stocks, which is what I had some requests about, to show you some less expensive stocks, you got to remember that there's more retailers in stocks like the Akamai's, the $60 stocks, or even the JC Penney. The regular people are buying this rather than professionals. Whereas the professionals, they need the huge dollar value stocks. They got millions and billions of dollars that they're trading every single day. So they need to get it in and out quickly. So if you can't trade at this level, it's a different game trading the upper dollar stocks than the lower dollar stocks, because institutions are buying these types of stocks, whereas the retailer, mom and pops, buy the other types of stocks. And this is why the famous phrase goes with the market lags the leaders. So today what I want to share with you is I want to look at, like, Google, for example. We have a rise of 0.92. It went up $1 for Google, and this stock is a $1,200 stock. Price line, you know, this one $10 move, and this is due to the earnings that are coming out, but the earnings look like they're going to be okay, so the stock will probably pop tomorrow. But this stock didn't do as much compared to the last few days. Looking at even Apple, which, you know, was a market leader, it's down $6. You know, so Amazon, these are the big, huge companies, you know, moving lower, $2. The market is lagging these leaders. Look at LinkedIn, you know, down $2, $3. What do we do with Lulu? Okay, again, nothing fantastic. So what happens is the big guys, they get out of these stocks because they have liquidity, and they get out of them quicker because it's easier to get out of them. Now, things like Facebook, it's a lower dollar value stock, so today there's a lot of hype and news, and I'll talk about that in a second. But what happens is that these leaders and these huge institutions, they need to get out quickly. And the ones that they get out the quickest is the leaders, and the ones that they get back in the quickest are also the leaders. So that's why usually you'll see these things like the Apples, the Netflixes, the Amazons. You'll start seeing these go and bounce a lot earlier than a lot of the other stocks, and then the other stocks follow that. And that's kind of what happens with the market lags the leaders. So I want you to understand that phrase. It took me a while to understand that concept. Now, going into Facebook briefly, there's a lot of news and hype over it today. You know, they bought out some stuff. The WhatsApp application there for mobile devices. And, you know, so because there's a lot of news and hype, the stock did get a little bit pumped up. But it has been doing really well. If you look at the move, we have the A to B, the B to C, and now the C to D. So if we take this and we move it here, you can see the move is right there. It actually exactly did the one-to-one move. So in a simple manner, A to B, B to C, C to D, it did exactly the predicted move so far. And we'll probably see this one continuing higher. Now, the earnings were okay. You know, they weren't amazing or outstanding, but they were pretty good. And the stock's reacting in its favor. Now, we do still have this gap here. Just because it's, you know, a week or two later, we still have this gap that could get filled. Now, looking at the intraday here, I got a bunch of different trend lines here. What happened with this stock was typically the company that's buying things, you know, since they're using a lot of capital, will tend to get sold off. Now, this one came back and popped higher, which is fairly unusual, which shows some strength behind the company. Look at the volume here. And look at that, comparing it to over here. You can see that there's a lot of empty gaps here in the volume, whereas here, it's a lot more volume trading it. So a lot of people were pumping back into this stock. So this one may start running higher here into the future. Who knows? Could get to the hundreds. We don't know. But you got to trade it accordingly. And I talked about this one a little while ago when it broke this level right here on this higher volume spike, and now it's continuing higher. So don't worry too much about the news and what's happening there. Look at the price and the action and the behavior, and this one's running higher. So it's doing pretty well, and you know, no pun about it. Tesla also had earnings. Now, typically stocks that do have nice earnings will you know, try and go back down because they gap up, slowly try to fill that gap. And right now, this one retested back at the highs from the 18th, 19th. So if we look at the daily, you know, you can see that had a nice high here. I mentioned when it broke to new highs over here, continued higher. And now as we zoom in closer, you can see that right here we have a nice solid little support line. You know, it tested today and it held above that. Can it still fill this gap? Yes, it can. So beware of this area and region of that gap. Also, the next one I want to discuss is, let's start looking at some different types of stocks. Let's see. We got Amazon here, still playing around in this trading range or region. I've been talking about this one for the last couple weeks. It's got this region or area. You know, it's still just consolidating and basing, so we'll see. It could be setting up for the next leg higher to retest this high, or it could be setting up to go lower. But right now it's just basing and consolidating to figure out which way it's going to break, up or down. Apple got this descending trend line right here, so it rolled over, you know, the last 2 days. I've been watching it probably come back to retest this 495 500 level if it can't hold here. Remember, we do have this gap still right here in this level, so it may go and fill that region or area. We got Nvidia, which I talked about last week or last time. You can see if I take it to the weekly, you can take a look at the long trend. We got the huge high of the 2560 I mentioned before. We got the $20 area, 1950, and we got this level right here, which is what I mentioned when it broke out, of 1645. So it broke here, heavy volume, moving higher, and can't see it on my chart yet. Let's zoom out. No, it'll go to that 20 area. So it's been moving really well. If you miss the move, don't chase it. But I mentioned this one when it was breaking out right there and then. You got other stocks. Let's see, CTRP. Again, this one, look at this trend line. Hit it here once, hit a couple times here, and third, fourth. Broke out on nice heavy volume here, retested it, it bounced down to test that level and continued higher. Again, now it's right around that 50 level. So you know, watch this one, and you can see that it tried to retest this, but it couldn't make it. So it might go back, retest this level at the 44 level, and then we'll see where it goes. But that's what stocks do, is they test things. They continue to test different levels and regions. If there's enough people that want value at this level, you know, right around that 44 level, then it'll bounce higher. If there's not enough people get into it, it rolls over. It's a matter of energy. It's a matter of direction, how things play out. Okay, Green Mountain Coffee. This one was consolidating here last couple days, and then it popping higher. So after it did this gap, continued the run, consolidating, now gapping up higher. If we look at the 30-minute, you can see this consolidation taking place right here. You can see that, you know, throughout the first hour it didn't do much, and then all of a sudden later popped higher. If you wanted to play safer, you could have played it right here, and boom. So it's almost pushing 125. Another nice stock. AMAT, same thing. Talked about this one last week. Look at this line here, region, moving well, pushing against it, popped higher. Now it's holding. Now it's going to probably consolidate here, creating a flag pattern. We'll see where it moves, up or down. Adobe, after it broke this descending trend line here, this triangle, held this support, broke it, had heavier volume right here, another heavier than the average volume, continued to move higher, and it's been very strong. Again, I wouldn't chase it here if you didn't get in it. SGYP, same thing. This one broke out today, descending trend line. It's the first day it broke out. Watch tomorrow for a follow through or confirmation. It's a low dollar stock, so I'm not trading it, but it can come back and retest this level and then maybe go higher. But look at the daily volume, much higher, about 4 times the daily volume than the previous day. So this one made a huge move, and it even it broke this price level. So moving higher there. We got ACT. Same thing here. This one, higher volume, higher volume, higher volume. Stock continued to run. I was trading this one with the options a while back over in this level. I was watching it right around the 130 level, and it's been working pretty well. So right here, this stock again popping higher. Be careful when you look at these stocks that are going a little bit parabolic, because this move is very accelerated now. So if you do go in here, if normally you trade 100 shares, then you might want to trade like 25 shares to start and get in a position as a starting position, and then maybe add more shares as time goes on, because these kinds of stocks can pull back pretty quickly. Sometimes, you know, the gains, they can get erased very fast in a day or two. So you never know. One day can totally erase a month's worth of gains, so you have to be careful. XLNX. This one as well, looking at the daily, you can see the line, trend line here, 1, 2, 3. Watching it since September time, and now pushing higher again, higher volume right here. As you can see, we did 7.9 million shares, whereas the average is right around 4.3 million. So around 4 million shares, but we did almost double that, and this stock continued higher and still moving. So doing well, holding up well. GT, I wanted to mention this one, descending trend line. It's a lower dollar value stock, just because some people asked me to do some lower dollar value stocks. Here you go. Descending trend line, this is what you're watching. You're watching this because here, accelerated volume slowly. You got 2 lower ticks, higher volume. Then again, accelerates the next one, didn't go yet. And then finally, huge acceleration. And now we got slight little retracement. And you can guess that it's trying to pop higher. So, you know, stocks don't go straight up. So it'll do a little pullback, and then it might come higher. Now, if you didn't want to trade it there, let's just say you wanted to play it on the safe side. Okay, so rather this descending trend line, you could have waited for, here we go, 5 minutes. Let's zoom over. You could have waited. Here was the pop. Look at the volume. Here was the trend line. Okay, right there. Okay, so this is midday, about an hour or two into trading. Then again, you had another opportunity. It retested it. Okay, so you can see how these stocks act and play out. So let me redraw this line so you can see exactly how that would look on the longer chart frame. So we'll erase those. So you can see that you could have gotten in on this one even here and still been profitable. So let's go to the 10 minute, let's go to the 15 minute, 30 minute. So you can see that even if you didn't catch this descending trend line here, you caught it here, you still would have been up. Okay, so it's just a different way to play it or trade it, but in either case, this one was here on the daily to show you the acceleration. We got the GDX that I looked at, the market vectors here, and this is the gold miner. So you can see that it's hitting a little bit of resistance area here, and it's playing in this range. So it can roll over or it can pop higher. So watch this one. The volume is pushing it. It's pushing it higher. So watch for this one to see if it pops or if it you know, rolls back over to retest levels. We got FRX. This one went parabolic, jumped very quickly, and you can see this right here. The next couple days here, or last couple days. Look at this. Look at this stock. It's from 2013. We were $30. Now we're at $100. So you don't want to chase these, but there are stocks out there that are doing fairly well. So again, look out for these. Why does it move? It's because it's on volume. That's why I'm showing you. I'm showing you that you don't need a lot of things on your screen. You don't need to make this complicated. What you need to do is find something that works for you, and then find a system and create your system so that you are consistent in that system. DPS, we talked about this one last week for sure. I mentioned that the safe line was right there to break higher if you wanted to get in, and if you wanted to get in early, this was the original line, and the safe line was right there, and you can see it's been going up Okay, you can review it on the video. It's on there. You can check it and verify it. I can't replace it, so it's there. It's there. You can see it and verify this, and it's due to the volume, and that's what happens. It's due to this volume. Think about it for a minute. Why do these stocks move? They trace and try these different levels. It's like hitting a wall. The more you keep banging on it with a hammer, the more you keep hitting it on it, eventually a hole will be made. And that's what these stocks do. It tried to do it right here, and it couldn't do it. So it went up, couldn't do it. Went back down. Went up again, couldn't do it. Third time, went up, couldn't do it. Volume continued to increase in that same span. And then finally, popping higher, moving through, and breaking through that wall. So, and then it continued. So now it's a strong stock. So this now is becoming a huge support level, or even this one if you want to play it even safer. But I talked about this one last week for sure. I was watching this for quite some time, and it's doing very well. Let's see, we got SWY is the other one. So here's the weekly chart, descending triangle. If we look at the daily, again, descending triangle. How did I know? Here, look at the volume. Again, more than average, continuing more than average. Pullback was on less volume. That's what you want to see, less volume on a pullback. And then again, volume continued to accelerate. So those are kind of the stocks that that I've been looking at. We got Mylan here again as well. From here, this trend line 46 last couple days, higher volume, continued higher. I don't trade all of these if that's what you're wondering. I do watch them to see how the market is moving, how the market's acting. I don't trade all of them. I really focus in on the big boys, the leaders. I try to focus in on the price lines, the Amazons, the Netflix. I traded Netflix today, and I'm waiting patiently on Netflix to either break this range or break this range to see where it'll go. Right now I have some spread positions on right here in Netflix, so we'll see how long it bounces around in this range. But you know, you have to find your own system. You got to find your own trading plans and your own rules. I'm just here giving you ideas and concepts and theories that you can learn from to take your trading game to the next level. I'm not here to just give you away free trade ideas and free concepts. I want you to learn so that way you don't have to go to the store and buy the fish. I want you to learn to go and do your own fishing so that way you know how to eat, so that way you know how to put food on the table. If someone always bought you the fish, then you would never know even how to get to the store and buy your own fish. If someone always told you exactly what stocks to pick, like some of those trade alert websites, then you would never know why you're picking the stocks that you're picking. You would never know the risk and reward strategy that you have. So think about it for a second. Stocks don't move in a straight line. They move up. For example, let's take a look at Netflix. They move up, they move back, they pull back, they consolidate here, and then they move higher. Okay? So here, this could be the next move up. Who knows? So they move up, they do pullbacks, and they also do consolidation patterns. Okay? So look at this pattern right here. Consolidation patterns. Okay? So that's what happens. They do consolidating sideways, they move up, and they do pullbacks. Okay? They move down. So how do you capitalize on that movement? How do you create a trading plan that works for you based on knowing this? Okay? It's a simple process of understanding this. The hard part is creating your trading plan and then leaving your emotions at the door. Now, if you're the type of person that, you know, is not a patient person, if you're not a person to take responsibility, this is going to be a very tough business. This business will teach you patience very quickly, or it will make you broke, one way or the other. It's going to either teach you the patience or it's going to make you broke. So you need to be cautious in your trading system. You need to be cautious in how you're managing your funds and allocating your money. Okay, you don't just put everything in one stock right away at your first day trading. You know, take a breath, learn how things move, learn the business, learn the art, and then pull the trigger when necessary. It's like being a professional tennis player. You know, it takes 10 years sometimes to train to become a professional. After 10 years, you go out, you win your tournament, and you get your sponsorship, and then you make your $1 million, $2 million, $5 million. Think about Tiger Woods to become a professional golfer. You don't just become a professional golfer your first day out on the golf course. It takes 10, 15 years to become a professional golfer. And then your first debut when you're 28, 30 years old, 25 years old, then you go out and you make your $2 to $5 million your first year. You know, that's what happens. And most people that get into stock trading, they think their first day in this business, they're going to be making a fortune. It's not the way it works. It's not the way the stock market works. It's not the way it works in the real world either. So you need to be patient, be cautious, create your own trading plan, get in the habit of learning what's happening in the markets so that way you can capitalize it. Okay, so learn the system, learn the game, learn the art. Okay, it's not going to be spoon-fed for you. And if it is, then you won't be consistent. Okay, you need to find your own way to find stocks. You need to find your own way to trade and make money from the market. It's not going to give you money. All right, so that's all I'm going to talk about today. That's what I wanted to recap. If you want to take a look at the Dow, it's been doing as predicted, as I mentioned last week, right here, hitting these highs, you know, doing a pullback retracement, retested it, moving lower. S&P, same thing. We're holding this trend line right here. Personally, I think the market is very extended. I mean, if you look at it back here from the 2000, which is 14 years ago, you can see the highs of the market over here. Of course, it would have been great to buy a bunch of stuff over here and capitalize on it moving up, but who knows where it goes. It could roll over further. But typically right here, you know, when things get stretched like this, I mean, our unemployment is not fantastic. A lot of things in the economy are not really that great. Some home prices are going up here and there, but in reality, you know, to be at the highest level right here, I would love to see people buying homes, 2, 3 other homes. I would love to see people traveling more. I would love to see, you know, students loving their jobs, but that's not happening. So the market's extended. It takes multiple months. Take a look at this area. As I mentioned in one of my earlier videos, in 2007, we got 531, 631, 7, 8, you know, it's about 5 months here. 1, 2, 3, 4, 5, 6, 7, 8. 8 months we consolidated here, and then we rolled back over. Now, I'm not saying that's what's going to happen. This thing could go higher to, who knows, to 2,000. It could reach 2,000. We don't know. It could reach that extended move and then roll over. But I'm just saying, be cautious and think about what's happening. Think about it. If this keeps stretching, that means the pullback will be huge. And the big boys will make a lot of money on the pullback, because if the pullback is huge, you know there's going to be some big players on the short side. Think about that one. All right. Thanks again. Thanks for watching. Thanks for supporting. And don't forget to check out that free video on the day trading domination lesson. It's free. It's a 20-minute video right here. Go to the YouTube channel, check it out. Already, I just put it up not long ago. Got a bunch of views already. People love it. You get to see on screen exactly what I'm thinking. It's directly from the course, so just something to learn from. All right, thanks again, and I look forward to hearing from each and every single one of you.